Attention all veterans, are you PCSing to a new duty station? Are you renting and thinking about buying? We have some information on the VA loans that will be helpful to you. I'm Nathan Stremick with the Real Estate Guides, and we get real estate to the people. Ashley and I went around town to talk to some of our local lenders about the information on the VA loan. No more wasting time, let's throw it over to our local lenders. Nathan Stremick here with the Real Estate Guides, and I'm going to ask Steve with Benchmark Mortgage a few questions about the VA loan process. How do you apply for a VA loan?
There's a few different ways you can do it. You can call us. We can do it right over the telephone if you'd like to. You can come into the office and do an application, or you can go online to tmnd.benchmark.us and you can do it on your computer, on your cell phone.
Can you use the VA loan more than once?
You can use the VA loan as many times as you would like. I personally had a guy that did 5 VA loans since I've been doing this.
This is Ashley here with the Real Estate Guides. I'm here with Hannah from First Western, and we're going to get some information on the VA loan and kind of get some of your questions answered. So a lot of our buyers are curious about the VA funding fee. Could you tell us a little bit about that and how it's calculated?
Yeah, so the VA funding fee is a one-time government fee. It's calculated based on the loan amount and the VA home loan usage, and it can oftentimes be rolled into the VA loan. Oftentimes veterans are exempt from it as well.
What are some ways that a VA buyer could lower that funding fee, or is there a way that they can take a percentage and make that a smaller payment?
So one of the most common ways that I see that the VA loan is exempt for borrowers is if they are a disabled veteran. You can also see a reduction in the VA funding fee if you do put a little bit of a down payment down on the home.
What are the benefits of the VA loan, especially compared to like a conventional or an FHA loan?
Yeah, so VA loans have great benefits. They oftentimes do not require a down payment. They have very competitive interest rates and closing costs, and they do not require private mortgage insurance, which is a huge benefit in cost savings on the monthly payment.
I am with Jordan Wald with United Community Bank, and we are going to go through a couple questions with the VA loan process. How do you figure out debt to income ratio for a borrower? How does that kind of work?
Debt to income ratio is super important for borrowers. It's the total monthly reporting debt plus your projected house payment against your income. So typically on when we're talking about VAs, VA loans tend to have an extended debt to income ratio up to 55% from our normal conventional of right around 45%. So that's a general rule. However, there is some fluctuations in that, and you can get up to, even in between 55 and 60, depending on other compensating factors. Reserves is a big one. Obviously good credit, long credit history. They also factor in the amount of difference your current house payment is compared to your next house payment, or rent payment compared to your next house payment.
So kind of a moving target.
It is a little bit. I would say a general rule is 55%. It does vary from lender to lender sometimes, and investor to investor. VA doesn't really have a set debt to income ratio, but 55% is a general rule for DTI for VA borrowers.
What can you tell us about, we've been hearing a little bit with higher interest rates, the IRRL?
So IRRLs stands for Interest Rate Reduction Refinance Loan. And it's a streamlined refinance available to VA loans. So, and it is exactly what it says. It's a loan to get a better interest rate. Maybe you want to go from a 30 to a 15. It's typically no cash out. So you can't, typically get cash back. Also, you can roll the costs into it. So a lot of times it's out of pocket. And the really big benefit to it is it's a streamlined sort of refinance. So typically no appraisal. You don't have to show income documents because the VA is already guaranteeing the loan based on where you were, and all you're doing is redoing the loan to get a little bit better rate and sometimes in the term.
So if you bought a house, you're at 7%, rates drop to 6%, you could do an IRRL to get down to 6?
You could. So there is certain stipulations that the VA has laid out to help you qualify for that, and that protects the borrower so that a lender doesn't reach out to them and want them to refinance, in any fluctuation of the interest rate and talk them into that. So there has to be a net tangible benefit to the VA borrower to go through the process. 1% is kind of the general rule of thumb, but a little bit better than 1% is usually makes for a little bit
More advantageous.
Yeah,
to
I mean,
borrower.
right. You know,
So-
because there are costs with refinancing. So, you know, you try to minimize those the best you can and make you get bang for your buck that way.
Awesome. So moral of the story is rates go up, you're locked in at 7. Rates go down, you could chase them down with the Earl, but you're not chasing them down in small increments, percent to 1.5%.
Yeah, I mean, and I would always reach out to your lender and say, hey, I heard rates are coming down. Where would a refinance be for me?
Another thing we hear people talk about is waiting on their certificate of eligibility, or I need to get it. What does that
Sure.
entail?
Certificate of eligibility is, in the simplest form, it's your ticket to a VA loan, essentially. So active duty veterans and retired veterans or separated military service members have what's called a certificate of eligibility that basically outlines the conditions of what they have is in terms of VA eligibility. To get that is an online system is the most typical way to get it. Your lender can pull it for you. There are some times when there's maybe some moving parts with their, maybe they just separated from service, or maybe they're, have a previous loan that's taking up some of their eligibility. Then you have to go through a little bit of a process with the VA. It's not on the automated system, so you might have to put a statement of service in. You might have to show your DD-214 or your separation papers for the National Guard to be at NGB-22. That's the separation papers for the National Guard. Once we get those, we upload them, so it's not a snail mail system. You can upload them to the VA, and then typically within 3 days, the VA will respond and say, we need another document, or here's your certificate of eligibility.
Question we get from a lot of our VA buyers, they want to know what they need to expect as far as a down payment, what they should be saving for a down payment. Can you tell us a little bit about that?
VA buyers, 99% of the time, will not need to come in with anything down. They can get 100% financing. And then the other factor of a mortgage will be the closing costs. So that will depend on if the seller is willing to give a seller credit or not for those.
Are there any limits for the closing costs as far as the allowance? Like, can they ask the seller to pay for all of their closing costs, only some of their closing costs? What kind of limitations are there with that?
Yeah, so as the lender, we will get the details of the property and narrow down what their estimated closing costs will be. And then the typical allowable percent for the seller credit is 4% of the purchase price.
One scenario that we see a lot with our VA buyers is they're not able to attend the closing. They're coming from another state, or sometimes they're even deployed and their spouses are running the show while they're gone. What are some options that you guys offer to kind of help accommodate those buyers?
We see that a lot as well, just with the timing of them coming here. They want to be moved into something by the time they arrive. So we have a few options to go through with them. Some of them come with different fees, but one example is a mobile notary. We can line that up and they can sign wherever they're currently at before they come here. And then another option would be to contact a title company there and they could do a courtesy closing.
For VA borrowers, what do they need to have ready if they're looking to get the pre-approval process started?
So for the pre-approval process, we have an application that can be taken online, over the phone, or in person, whatever works best for them. They will fill out their personal information, employment history. I will then look at their credit report and we can go over their current liabilities. We will go over their goals of what are they comfortable with their monthly payment? How long are they going to be in the property? Those types of questions. And then as far as documentation is concerned, we'll ask for pay stubs, driver's license, bank statements, and their last year's W-2.
So there's a lot of information out there. We see a lot of TikToks, a lot of reels. Our buyers are curious what their credit score requirements would be for a VA loan.
So we at least need a credit score from the 3 merged credit report that we pull. VA buyers technically don't have a minimum credit score requirement, but as the lender, we'll want to get a full picture of their situation. So that way, if anything does need to be addressed, we can do that quickly to get them into a home as soon as possible.
So first question for you, if 2 spouses are eligible for the VA loan, how does that affect eligibility, or just kind of give us that dynamic?
Yep, so if husband and wife are both in military, both have VA entitlements, and they want to purchase a house, basically you just decide whose entitlement you're going to use and don't use the others. Husband and wife are buying a house, husband decides we're going to use my entitlement, the wife's doesn't get touched. So down the road, if they decide to move or get orders to somewhere else, they can use the wife's and it's untouched and they shouldn't have to put any down payment.
What happens if someone wants to buy an investment property? Can they use the VA loan to buy an investment property?
So you can use VA loans to buy duplexes, triplexes, fourplexes, but you can't use them to buy commercial properties. VA benefits are meant for primary residences. So if you buy a duplex, the service member can move into one side of that duplex and rent out the other, but they have to occupy the residency at some point.
How long do you have to occupy a home when you purchase it with the VA loan?
You just have to move in within 60 days of closing. There's no time frame of how long you have to live there, because especially with our service members, sometimes they get orders and they buy a house and they got to move right away. So there's no minimum time frame, but they just have to move in within 60 days of closing.
Okay, and if you, for example, a fourplex, they can live in one unit and rent the other 3 out?
Yep. And then if, let's say they get orders, they can keep that fourplex and rent it out completely at that time. Intent just has to be to purchase and live in the property.
All right, we're back. Hopefully this information was helpful and will help clear up some misconceptions about the VA loan. If you like this video, you might like one of these 2 over here. Thanks for watching, and we'll see you in the next video.